A voice with a powerful message is one that is weighted by wisdom, experience, and a strong belief in the future. This compelling video unravels Cathie Wood's enigmatic message about the future of Tesla and electric vehicles. It's a call to action, a plea, and a promise of something extraordinary. I don't think the strike has anything to do with it. Instead, I think it has everything to do with a shift in consumer preference towards better, more affordable vehicles that Tesla is leading by simply passing cost reductions onto its customers. I think that's good news for Tesla because the complaints we hear are that people can't afford these vehicles. As you can see, Rishi Sunak is delaying his goals for the UK until 2035. No, we don't think so. In fact, the total cost of ownership, this is in the United States, so things are a little bit different, fell below the total cost of owning a gas-powered vehicle approximately 2 to 3 years ago. The sticker prices do include insurance. Yes, as I mentioned, there are local variations, but in the US, insurance is included. In fact, Tesla is willing to provide insurance because it is so confident that there will be fewer accidents and fatalities involving its cars. So yes, everything is included. We have always invested for the long term, but a significant increase in interest rates interrupted what was a very wise move. Come along as we unravel the mysteries of Tesla stock, the overall cost of owning an EV, and the state of the economy. As we delve deeper into the world of Tesla and the electric vehicle, what precisely does she want you to do with those Tesla shares and what secrets lie ahead? Revolution as we make our way through this financial maze, we'll reveal the cryptic allure of Tesla stock with a drop of generous incentives and an unwavering faith of a visionary. Are you ready to take on this exhilarating journey with us? We'll explore strategies, challenges, and the unwavering conviction that's captivating investors worldwide. Travel with us, the path ahead is paved with curves, but it also offers opportunities for insight and possibly even a revelation. Are you prepared for the revelation? Stay tuned. Don't miss this fascinating voyage into the realm of innovation and money by subscribing. Greetings and welcome to the world of electric vehicles from Tesla Hype. The emphasis is on the EV landscape as a whole rather than just Tesla. The recent events in Detroit may have an effect on Tesla, particularly if a strike results in possible shortages, but the wider picture indicates that this movement is mostly being driven by changing consumer preferences in favor of reasonably priced electric vehicles rather than labor problems. Though some may argue that electric vehicles are still deemed pricey, for example, in the UK, Tesla is at the forefront of this transformation, regularly passing cost reductions onto its customers. Rishi Sunak, the deadline for phase-out of internal combustion engines was extended by the Chancellor of the Exchequer to 2035. This decision has sparked discussions about the feasibility of this transition, with some speculating whether consumers can really afford the switch to EVs. However, let's take into consideration a critical factor that is frequently disregarded in this discussion: the total cost of ownership in the United States. This viewpoint has already undergone a significant transformation. There is a tipping point at which buying an electric car can benefit people monetarily and environmentally. Even after accounting for insurance expenses, the overall cost of ownership for electric vehicles, EVs has decreased relative to conventional gas-powered cars. This change reflects how the affordability of EVs is changing. Being a pioneer in the electric vehicle market, Tesla has gone above and beyond in terms of pricing. They offer insurance as a part of the ownership package since they have such faith in the dependability and safety of their vehicles. For individuals thinking about making the conversion to electric vehicles, this special offer not only makes the procedure easier for Tesla owners, but also adds another level of appeal. The UK's decision to prolong the phase out of internal combustion engines raises legitimate concerns about the viability of the transition, but it's important to acknowledge that the landscape is changing. In the US, for example, the total cost of ownership has shifted in favor of electric vehicles, making them not only a wise financial decision, but also an environmentally responsible one. Speaking of technology and innovation, unlike more established diversified funds like Capital Group, ARK Investment Group is adopting a novel strategy. ARK is determining its path, deep research, and an initial principles approach. With an emphasis on companies or its driving forces, industries will change when poise replaces traditional funding. Although ARK's strategy may closely mirror broad standards, its correlation with these benchmarks is minimal. This divergence shows ARK's dedication to diversity and its faith in small firms that will change the world in the future. The important question is whether this less diversified strategy can be successful in the next 5 years. ARK is confident in its mission to support companies driving disruptive innovation, even in the face of unprecedented market conditions. The market is closely monitoring the Federal Reserve's actions, regardless of whether there will be another rate hike. The expectation of rising rates caused underperformance in 2021, which intensified in 2022. The question then arises as to how Cathie Wood, the renowned investor, will adjust her approach in light of these sobering quarters. ARK believes that given the hurdles presented by the pandemic and the constantly changing macroeconomic situation, how does Cathie modify her approach? It's noteworthy that she maintains her unflinching trust in innovation even in the face of adversity. The path to recovery involves focusing on revenue growth and expanding profit margins. Recently, retirees with substantial wealth have shown unwavering faith in Cathie Wood's approach. These individuals, who are sometimes referred to as old farts, have invested heavily in innovation technology and companies like Apple. They have chosen to ignore the noise from financial TV or radio and have reaped the benefits of their investment decisions. However, given the volatility seen over the past few years, can the Cathie Wood approach remain effective for the next 1, 3, or even 5 years? Cathie says that the worst of the interest rate spike is over, which has had a big impact on performance. She says her strategy is now ready for the mainstream. And the recent acquisition of Rises, a business in Europe and the UK that focuses on global megatrends, gives her even more confidence. Looking back at the early 2000s tech and telecom bubble, while Tesla may be shifting to slower growth, Cathie points out that the seeds for the current market dynamics were sown during that time and that the company still provides growth potential at a competitive price. What makes Tesla stock more appealing is that it is currently more affordable than it was a year ago. Additionally, a number of Tesla's business facets, like its fully autonomous driving capabilities as Tesla expands its operations and pursues its 2020 Battery Day ambitions, it is well positioned to earn larger profits, making it an appealing investment opportunity. Insurance ventures and cost-saving efforts are undervalued. Based on the projected growth trajectory of Tesla over the next 10 years, strong revenue growth is anticipated, even exceeding the management's aggressive 50% target. At the current stock price, this outlook offers investors an alluring opportunity. However, it's important to note that Tesla recently missed its internal target to achieve over 50% growth in deliveries in the most recent quarter, recording a still commendable 40% growth. To gain a clearer perspective on Tesla's prospects, we need more transparency from the company. A thorough analysis and future guidance would help investors align their expectations with reality. Although impressive, management's declaration of a multi-year 50% year-over-year growth goal lacks the specificity that investors frequently want given Tesla's growing size. Since Tesla now produces over 1.3 million vehicles annually, there is a rising susceptibility to economic swings. Even little slowdowns in the economy can have an influence on consumer demand. Thus, more accurate guidance and annual targets are needed. Furthermore, investors are eager to have confidence in the accuracy of these growth projections because high-growth stocks like Tesla are particularly vulnerable to valuation shifts based on small changes in growth rate assumptions. Now, let's look at the incentives that might be needed to entice U.S. buyers. First, will there need to be any price adjustments? It's likely that Tesla will need to make small price adjustments to ensure that a larger number of its vehicles, particularly the Model 3 and Model Y, qualify for the Inflation Reduction Tax Credit. This tactic might be crucial for surviving a downturn in the economy in order to achieve its goal of reaching an impressive 1.6 million deliveries by 2023. One of Tesla's key strategies is to stimulate strong demand growth. To that end, the company plans to implement some price reductions for its platform in the upcoming year. These reductions are intended to generate organic demand growth, although Tesla had previously stated that they expected to grow at a rate of 50% over a number of years. The real world is often unpredictable due to factors like market dynamics, unforeseen challenges, and global economic conditions. Even though Tesla may not always live up to expectations, it's important to take the bigger picture into account in the quick-paced world of finance. Even a tiny miss can cause big swings in stock prices. The current situation that investors must deal with is difficult. When it comes to Tesla, there are two important things that watchers should be paying particular attention to. First, as 2023 approaches, maintain a careful check on Tesla's growth pace. With a projected 24% increase in deliveries for the upcoming year, a double-digit growth rate is still anticipated. Next, look at the profit indicators. In addition, there is potential for further improvement as production in factories like Berlin and Austin continues to ramp up. In more recent news, Cathie Wood's ARK Investment Management reaffirmed its confidence in Tesla in a striking demonstration of confidence. Tesla has previously demonstrated impressive margins. Under Cathie Wood's direction, ARK Investment Management demonstrated its dedication to Tesla by purchasing more than 176,000 shares of the company during the first U.S. trading session of the year, demonstrating their strong trust in the company's long-term potential. This investment choice was made after a quarterly delivery report caused Tesla's stock to plunge by 12%. ARK's continued acquisition of Tesla shares since 3rd October indicates their conviction in the electric vehicle pioneer. This strategic move is in line with ARK's vision for the future of technology and innovation. However, let's take a closer look at the larger context. Like many other companies, Tesla had difficulties in the last year, which resulted in a startling 65% decrease in the value of the company's stock. Numerous causes played a role in this reduction, including the two main issues are inflation and rising interest rates. The demand for electric vehicles has been significantly impacted by these macroeconomic considerations. As we evaluate the circumstances, it is clear that Tesla's journey has been fraught with ups and downs, much like the stock market itself. This is a market that Tesla has been leading. We've dug into the world of Tesla and its prospects for the future, exploring the strategies and challenges faced by Tesla, as well as the unwavering confidence displayed by influential investors like Cathie Wood's ARK Investment Management. We've also looked at the affordability of electric vehicles, noting the extension of the FHA electric automobiles, such as those produced by Tesla, are becoming not only environmentally beneficial, but also financially appealing. So what do you think will happen to Tesla and electric vehicles in the future? Before we wrap up, would you please take a moment to hit the like button and subscribe to Tesla Hype? Thank you for joining us, and we look forward to seeing you again in our next videos. Do you think that the total cost of ownership will change the game for the adoption of EVs in the market?